Hello everyone, just another video then on our revision pack, and specifically our question 1 from the revision pack from the mock 2022, the sole trader question. And we're on part 3 now, alright, with the patents. Alright, this is a common enough adjustment that comes up with sole trader accounts. So the patents, we'll have just a quick read over here, actually part 3. So patents would incorporate 3 months investment income, right? So incorporates 3 months investment income means we're going to have to include, we'll have to try and get 3 months investment income and include in the patents. Are to be written off over a 6-year period, okay, 6-year period, and which commenced in 2020. Now, the only thing we kind of really need to make an account of first is always make sure you read back and always have the year end that you're doing in mind the whole time, especially with an adjustment like this. Okay, now it commenced in 2020, but we're doing the year end 31st December 21, so that means there's already 1 year of this patent write-off already complete. So really, we're down to 5 years. All right, we've got the write-off for our accounts. Okay, so anyway, we'll do this little working together then. All right, so again, it's a good idea to name our workings. All right, so I'm just going to call it part 3 and patents. Patents or patents. All right, so the first thing we need to do is, our step 1 is first get 3 months investment income. All right, they're asked us to incorporate 3 months investment income. So step 1, get 3 months investment income. Okay, now what you need to do, all right, is go to your Tribans here. All right, and we need to look where we can find the investments. All right, and I think it's the fourth figure here, down 3% investments. It's always a good idea to highlight or underline the year they acquire any investments. All right, because that could have a knock-on effect when you're trying to work out investment income for the year. So we see there it's the 1st of May. All right, so that means to have this investment income then about 8 months. All right, but anyway, it's 80,000. That's the figure that we're looking for there, right? So it's 80,000. And the return on is 3%. Okay, and we're just looking for 3 months worth. All right, so if you put that together, you get 600 euro. All right, so what we do next then is drop your patents account. All right, we'll just do it right underneath here. All right, patents are an intangible fixed asset. Okay. So there you go. All right, that's how we kind of label it then. So the first thing we need to do is grab our trial balance figure. All right. So now, if we look at our patents there, okay, it's right underneath the investments there. So patents, and it's 69,400. So that's our starting figure here for our account, right? 69,400. Okay, and what you're going to do, this 3 months investment income has to be included here in the patents. All right, so what you'll do is you will debit the patents account. All right, 600 euro. Okay, so there you go. You've incorporated, you've included there in your patents. All right, now what you could do, or maybe right beside it here actually, right, to complete your double entry, what you can do is drop a investment income account then, right? So just like that. Okay, of course this is, well, an income account, but it could turn into an asset account. We'll see how it works out. So if you're debiting then the patents account 600 euro, you're crediting your investment income account. All right, so I'm just going to write patents here. Okay, 600. So there's your double entry complete then. All right. The other thing you need to watch out for, just to kind of just help us complete this a little bit, the investment income account. I'm just going to quickly see, do we have any investment income that was in the trial balance. All right, and I'm just having a quick look here, and there doesn't seem to be anything there, so that's okay, right? We don't seem to have anything of investment income, so we can just leave that as is for the time being. Okay. Step 2 then, what you can do now, right? You're in the position now to work out the patent write-off. Okay, so patent write-off. Okay. Now, we just have to be careful now, right? It commenced in 2020 and we're doing 2021, right? It was 6 years, okay? But sure, if 1 year's already gone, now we're down to 5 years, all right, to write off, okay? So, therefore, right, our patent write-off is going to be the 69,400 plus the 600 that we're including the patent write-off this year, and we divide that by 5 years. All right, you should come to a figure of 14,000. All right, so that's a patent write-off then. All right, and that will go to the P&L. All right, you could probably have that as an admin expense actually. All right, admin, and put that to the P&L. So your double entry, how this works then, you will credit your patents account, right, 14,000. Okay, and the debit side of that, if you want to, you could draw a P&L account and you'll debit 14,000 to the P&L account. Patents by its nature, they should be written off or they should be reducing every year. All right, that you have them. That's why there's a write off to the profit and loss account every year. All right, so if you were looking at your balance sheet from year on, this figure will be reducing. So what we're left with then, right? We can close off the patents account. Right, that will add to 70,000. Okay, so your balance will be 56,000 on the patents. All right, so balance brought down 56,000. Now that's an important figure because that is now our new intangible fixed asset for the balance sheet. So that's a balance sheet figure now. All right, for our patents. Okay, the last step you can do here now is actually let's tidy up this investment income. Now I know they're not really asking for it yet. The only thing is, since you're already fiddling around with investment income, what I would do is I would figure out the stuff that might be due at the end of the year, because you're guaranteed you're going to be asked for it later on. And of course you are. The very last thing here actually, mortgage interest due and investment income due. So you're going to be asked for it anyway. So you might as well do it while you're working on it. So this could be your step 3 maybe, right? So get investment income for the year. Okay. Now the only thing you need to be careful of is dates. When do you acquire assets, or especially with investments? Okay, that's what I was saying earlier. It's the 1st of May 2021. All right, so from the 1st of May 21 to our year end 31st of December 21, that would give you 8 months. All right, that's what we were talking about earlier. So the work out to the investment income for the year then, it's going to be 80,000 multiplied by 3% by 8 over 12, right? And that will give you a figure of 1,600. All right, so that's your total. That should be the investment income for the year then. All right, now the total of that amount, that full amount, right, goes to your profit and loss account. All right, so how your double entry works here then, what you'll do is you'll debit, we'll write P&L here, you'll debit your investment income account, right, 1,600, and if you wanted to, you could draw a little profit and loss account here if you like, right? On the other side, that then is going to the profit and loss, right? And the full amount, this 1,600, has to go to it. So now, what's kind of happening here is you're in a position now to complete this. All right, so that's why it's kind of saying, like, sometimes an income account, especially if an investment income account, could turn into an asset account, and it looks like this is going to happen because what you're going to end up here, right? If we take these two figures, we're trying to balance this off, right? You'll end up with €1,000, right? So close it off. So that's 1,600. 1,600. So you're left with 1,000. Balance brought down. All right. And now what you have there right? That's investment income that's due, okay? And that's a current asset in the balance sheet. So so what you're doing with one little step there, one little working, you're getting profit and loss figures and balance sheet figures, all right? But there's your complete working for patents, the write-off, and the investment income due then as well.